Online at silver-investor.com. Last time I saw you was 1 year ago. It was January 2012. You were really bullish on silver. Do you think you were too enthusiastic?
Looking back, I was. Basically, I went back and reviewed the charts really for the big run-up in 2011, where it basically went from $26 to about $48 in a matter of weeks. And I realized, I was too enthusiastic, that it's going to take about a year and a half, maybe 2 years to work off that kind of a move.
And why is that?
Well, markets go from undervalued to fair value to overvalued. Temporarily, silver was overvalued in that momentum play. There were like 4 or 5 margin increases for silver at that higher level, above 40, for the market to cool off. And so once it cooled off, it went down drastically. Once that happens, you have a spike high. I know from experience and study that it takes a long time. It's called overhead supply. And what that means is that people that bought it at 40 or 42 or let's say 38 in the area or higher are now at a loss when it hits 33. Well, most people don't accept a loss, not easily. So they'll wait for it to come back to 33 and they'll sell and say, well, I broke even. And that overhead supply for everybody at 33 that wants to sell has to be worked off. And then it moves up to the next level, let's say it's 35. And everybody that's disheartened with silver after a year and a half or 2 years says, oh my goodness, it's 35, I'm going to sell it, I never want to talk about silver again, I can't stand it. And that overhead supply is worked off. And so it goes until you get back to the new high. And once you hit above 48, then everyone that sold it, not everyone, but some people say, oh my goodness, did you hear about the silver story? It's so great, I can hardly wait to get back into the silver market. So people do psychologically the opposite a lot of the time of what they should do.
So what's the silver story now for 2013?
Silver story right now is going to be a good year, not a great year. I think we're going to be above 40. I also think we may get lucky enough to test the $48 level a couple times. I don't think we've got enough juice in the market in 2013 to sustain it over the $48 level for any significant amount of time. But there's been a curveball thrown in the market as far as I'm concerned, and that's this Bundesbank situation where the Germans want their gold back. And all of a sudden people are waking up to, well, maybe these gold nuts that say, gold is in short supply and it's not as plentiful because it's been hypothecated and rehypothecated, and there's all this paper gold out there and derivatives golds are plentiful, but physical gold isn't. All this stuff that we kind of get painted with this big broad brush that we don't know what we're talking about, all of a sudden it's making a lot of sense. Germany can't get their gold back for 7 years. How absurd is this?
So maybe they aren't wrong after all.
Maybe they're not wrong after all.
And what would be the impact of that if those people, we're talking about the people mostly from GATA and those kinds of groups, what would be the impact if they weren't wrong? And in fact, they are right.
Yeah, your guess is as good as mine, but I'm not shy at voicing my opinion. I think it could be significant. I mean, if the New York Times gets the story even half right, and some of these sleepy North Americans wake up, I'm not talking about people at the show, I'm talking about the other people, they might grasp the concept that, well, there's a reason, first of all, there's a reason why Germany wants their gold back. Secondly, there's something wrong if they can't get it back in a timely manner. And lastly, they would start to investigate their own questions surrounding that dynamic, and maybe they'd reach a conclusion that, you know what, paper money isn't the place to be, or savings at a zero interest rate isn't really good for me, or whatever the conclusion they draw. I think it's going to put a lot more pressure into the metal. So because of that, it's harder for me to predict what's going to happen in silver and gold this year. It's a wild card, so to speak.
And as far as gold, are there other things that you're watching besides what's happening in Germany?
Absolutely. I mean, we're looking at, not only the shows, looking at sentiment overall, what people's feelings are. We're looking at the geopolitical scene. I'm really not favorable to any political group. I'm libertarian, but the problem is that you've got to look at the real world the way it exists. And, this thing with the gold and the German thing could turn into a currency crisis. I mean, there could be currency wars or something started. I don't know. I don't want to get negative, but I'm well studied on the topic. And what could happen is a bit scary, because then there could be trade barriers set up. Like Germany says, well, if we don't get enough of our gold back by this time, then we're going to put a tariff on any goods coming from the United States. And other countries say, yeah, we're going to side with Germany. Why are they doing that? Well, because you guys aren't giving them their gold back. So I'm just projecting possibilities. I'm not saying it's going to happen. No, what I am saying is it's a great area of concern when you got these international trade settlements that aren't being rectified. Again, in a manner that you would expect. I mean, the U.S. broke its contract with the world August 15th, 1971. January 21st, 1980, gold goes from the fixed price of $42.22 an ounce to $850 on the spot market. I mean, once it was released from government control, even with management, it made a huge move, like 2,500%. So I think we're going to see that again this time, and we're not there yet.
No question there are some interesting times ahead, definitely.